All right, guys, back to work tonight. Thursday is behind us. We got Non-Farm Friday right around the corner. It's Thursday evening, time to get back to work. Got to get ready for tomorrow's non-farm payrolls. It is the 6th day of January 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, boy, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Friday, not just any Friday, non-farm Friday, first Friday of a brand new year. Got a bunch of great trades setting up on our radar. As we talked about in last night's newsletter, we pretty much got what we anticipated today. A bunch of ranges on the charts. Got a nice bull range on the oil, a little bit bullish on the Nasdaq and the S&P. And anytime we got ranges, right, we're buying low, we're selling high, we're trading failed breakouts and looking for a couple different breakout patterns. By the end of this video tonight, you'll know my favorite trades for tomorrow to make sure you finish the first week of the year firmly in the green. Before we jump in, though, and get our hands dirty on these charts tonight, make sure you subscribe to our YouTube channel. I publish this video every evening with my best trade ideas for the following day. Don't miss tomorrow night's video. Make sure you subscribe. Hit that little bell icon because a lot of this stuff is very time sensitive, as you can imagine. Also, too, if you have any questions, drop those questions in the comment section. We'd love to answer any questions that you might have about anything we talk about in this video tonight. And as always, I appreciate you guys tuning in tonight. Do me a favor, hit that like button if you guys enjoy this video as much as I enjoy making it. But enough of the intro, though. Time is ticking. Friday is not going to trade itself. Let's get ready here for Non-Farm Friday. Now, like I mentioned earlier, we got a bunch of ranges on the charts right now. Range market on the S&P, range market on the Nasdaq, range market on the crude oil. Now, I know we had that big move down yesterday, but believe it or not, the bulls do have quite a bit of momentum at their back right now. A little bit more bullish than bearish on the S&P, a little bit more bullish than bearish on the Nasdaq, a whole hell of a lot more bullish than bearish on the crude oil. So we definitely have some great buy setups, either buying low or potentially buying breakouts here for tomorrow. Got some big news on the schedule. We may have some very nice big bull rallies on the charts tomorrow. And of course, you know me, I'm going to make sure we cover all the bases. We'll talk about how to sell off the highs and how to time a reversal on these markets for tomorrow as well. So I'm going to cover all the bases as we dig into the plan for Non-Farm Friday. And speaking of Non-Farm Friday, though, why don't we take a quick look here at the schedule, because if you missed earlier on in the week, we've been talking about this all week, right? Big news of the week is tomorrow morning at 8:30 Eastern time. Now, please don't forget, right? Don't forget the evening ahead of that employment number. This is the biggest news report we get as traders. You know, you get the employment number, the non-farm payrolls, the GDP number, the FOMC announcement. You know, those are kind of the top three, you know, big news events we get as traders. We got one of the big top three here tomorrow morning. What that usually means, it means we're going to have a relatively quiet, you know, low volume overnight session. Traders will be waiting for the news tomorrow morning at 8:30 before they commit any capital. That may not be the case. You know, it's the first week of the month, so be aware it's probably going to be a little bit slower than usual overnight. But you know, if it's not wonderful, but usually it's a little bit slow, right? So just be aware of that. It may be a bit lower volume, a little bit slower personality in the overnight session tonight. So don't force those trades in the overnight session. And then also to be aware, the market does tend to kind of whip around a little bit around that employment number. But by about 8:40, 8:45 tomorrow morning, we should have some nice clear price action, and we can get back to trading it tomorrow morning and every morning in our trade room. So don't forget, 8:30 is the big news tomorrow. Careful overnight. Don't get whipped up. Don't get chopped up trying to force trades around the employment number. Let that number come out. Give it about 10 minutes, and then we'll update our charts and we'll trade whatever updates, right, we see in the trade room. So employment number tomorrow, big news at 8:30 Eastern time. And speaking of trade room, don't forget, I would love to have you there trading right there with us. I'll put all the membership links you guys need. I'll put all the important links I talk about tonight in this video. I'll put them all in the description of that YouTube video. Definitely grab that link, and I'll see you guys in the trade room. Let's get back to our charts though here. So we know what the big news looks like here for tomorrow. S&P, Nasdaq, crude oil, everything is on the ready here for us here. Why don't we grab a look at the S&P? Everything is relative, everything's range bound, of course, but going into a big news report tomorrow. And we also have quite a bit of real bullishness, right? Quite a bit of bullishness right now. You can see on the S&P, there's that big range right in the middle. We've got that nice big pop up here coming off of that low and of course into that trading range. At this point, kind of the best ways to trade this market is going to be to either buy, because ranges of course act like magnets, either buy off support levels down below the range, right? So buying off those support levels, that'll be one place I'm looking to trade tomorrow. I can also sell it if it breaks down tomorrow. Now we'll talk about kind of what a breakout would look like, how to qualify that breakout here in a second, right? So we can definitely buy it back up. We can sell it if we see proof of that breakout going lower. And then of course, one of my favorite trades in a bull market or bullish bias, bullish momentum into a trading range is to trade that breakout, right? Kind of that slingshot breakout there. And since yesterday was the big down day, there's no reason why we couldn't expect this market to really want to crank, back up to places like Friday's close at 47.61 and a half here. So we definitely have plenty of, I think, pretty good opportunities here. A lot of this will depend on what happens overnight and how that news, of course, affects us tomorrow morning. But let's talk about this, right? How do we trade this stuff as it goes higher? Well, first of all, if it does go higher here, we really got to be careful being a seller on this right now, because you've got all of this momentum, right, that's breaking out here. Now, there are, for the most part, there are about 4 different types of breakout patterns, right, as we go higher. We're not going to want to try to buy into this area right here. So one of my favorite breakout patterns, called the 1, 2, 3 breakout, will look kind of like this, right? We pop up, we hold the pullback, we jump off the moving average. Once we see that 1, 2, 3, and remember, as we always say, right, it doesn't matter how strong the first leg is. They have to hold the pullback. They have to hold the pullback, right? They have to hold the pullback. So one of my breakout patterns I'm looking for tomorrow is a 1, 2, 3, right? Again, hold that pullback. And once we get that 1, 2, 3 breakout, I can now mark up that high. I can mark up that low. I can drill down to my faster time frame, and I can find one of my favorite entry setups. My favorites are trap setups and failure setups on our faster time frames. Now, again, this is an 8,000 tick chart. We're not going to day trade off the 8,000 tick chart. I'll talk more about. In fact, if you want to learn about the faster time frames that we use and the different entry setups we actually use in our trade room, I cover all those details in our free trading class. I have a great little quick start class. I'll put a little link up there for you. It's free right on our website. That'll give you a full rundown of the entire strategy that we use every day in our trade room, along with all the entry patterns and what time frames to use. So grab a little pop up there in the upper right hand corner, right? So one of them will be a 1, 2, 3 breakout, right? Mark up that high and grab that first pullback right off of that low. Keep in mind, too, the size of that breakout leg is usually going to be a measuring leg. So we can measure the size of that breakout leg, and that'll give us an easy idea there for an easy target as we go higher. I would definitely leave a runner on that trade, too, because, again, that Friday close up there could easily be a magnet. It's amazing how many times we finish the day on a Friday right back at the previous Friday's close. So keep your eyes on that 61.5 there as we go. How about another one? Another one of my favorite breakout patterns. We'll talk about a couple breakout patterns on this one. We'll cover some more on the Nasdaq and the oil. Another one of my favorite breakout patterns called a 2-try breakout, right? So strong move up, shallow pullback, higher high in price. This has been one of my favorite patterns over the past 6-8 months here, right? Again, it's a strong run up, a shallow pullback, that higher high in price, and that little trap below that low. And again, think about the size of that breakout leg. That's going to be a symmetrical target, right, as we go higher here. How could I sell off the high? Can I sell it? I can definitely sell it, but we have to use the 2-try rule because, of course, it will be very bullish here. So as we go higher, I definitely want to see this thing come up. And honestly, this level up here at 47.23 and a quarter, we may see something like this where it goes running up. The buyers come in, they try once, they try twice, and we're selling it right back down into that trading range. That's what I mean when I say the 2-try rule, right? You're going to want to give, remember, there's a lot of momentum here now for the bulls, right? So let them try once, let them try twice, and then once we start seeing those buyers fail, that's going to be an easy signal that we can short right off the high. I got a couple more ways that I can trade that reversal off the high. I'll talk more about some different options on that as we go later on in this video, but that's one of the reversal setups I can look for off of that high. It's a pretty simple idea, right? Get up into resistance. The range below us is a magnet. We get up, the buyers once, buyers twice. And again, that's what I mean by the 2-try rule there. And again, you'll see a lot of examples of this. I have probably 100 or so examples of my favorite setups inside that free quick start class that I mentioned earlier. So you'll see a lot more kind of real examples of how those trades look like on the faster time frame. So that's how we buy it. That's how we sell it as we go higher. We really don't want to mess around in the middle here. Now, what if the market rolls lower? If the market rolls lower, now the sellers are going to have a lot of momentum going lower here. There's going to be a trend line coming down overhead. And so, like I mentioned earlier, you can definitely buy down here. But we're going to have kind of two big problems. You know, it's a great location to get long because, again, you've got that range above us acting as a magnet, right? So you definitely, it's not a horrible spot to get long whatsoever, but the problem is going to be all of that bearish momentum. And then on top of that, you're going to have that trend line coming down overhead. And those trend lines, they can really make for some headaches here. So as we go lower, the same, kind of the same idea, right? How do we sell off the high up here? We need to use the 2-try rule. Now, in this particular situation, what I'd like to do is get the 2-try rule, but use a trap entry, right? That trap entry, again, we want to use the 2-try rule down here because of the overall bearish momentum at that point. We're rotating down off the high. It's an overall bear market to begin with. And so we want to use the 2-try rule to kind of trap in those bears, if you will, give the bears the benefit of the doubt. But I also think that trap will be the best entry here as it helps to keep us out of trouble, right? So we're not buying into that trend line, right? As opposed to if that trend line wasn't there, I could just simply take the 1, the 2, and I could say, all right, well, all the stops of those sellers are right there, and I could just buy right into those stop losses. Now, let's say we do get that, right? Let's say we don't get that trap, right? Let's say we don't get, again, the trap be the best because that'll get you in nice and low, avoiding that trend line. What if you didn't get the trap though, right? What if that trap is there and you don't get it? How else can you do it? You can buy the breakout pullback, right? The breakout pullback on the other side of that trend line, right? Makes sense, right? So 1 try, 2 try. I'm not a big fan of buying right into that trend line just because a lot of times it'll go lower and take you out and then go back up without you. So what I would do is, again, find that trap down there or just grab that breakout pullback off that trend line. And then remember, these are really exciting because now the amount we go below the range is the amount we go above the range. And you can kind of see, right, the size of that move, got that expanding triangle up there. There's a lot of really great targets waiting up at that high here. Last but not least here, how do we sell it as it goes down, right? How would I sell it as it goes? Well, look back here. Look what happened back here. This is a really good example of why I always remind you guys in these videos that whenever we have a range, it does not matter how strong that first leg out is. Right? Once those bears fail, whoop, right back up again. So if we get that strong move down, you know what has to happen, right? The bears have to hold that pullback and jump. Okay. Now, don't worry about where you are at that point. Once we get that 1-2 go, once we get that jump off the moving average, yeah, now it's on, right? Now it's on. And one of my favorite entries, again, as I mentioned earlier, you want to take that first test. One of my favorite entries off the high of that new channel is we call a bull trap, right? It's find those prior swings and look for that short, right? Look for that short. Now, again, where would the target be on this? You want to look at the size of the breakout leg, okay? And then take that size leg and pin it right to that high, okay? Don't worry about the middle leg, right? Oftentimes the middle leg is kind of a weird small leg. You know what I mean? You'll oftentimes see it do something like this, right? Where it'll take off at the downside. The bears come in, right? They hold it, right? And they make a run going lower. Okay, so now we've got that breakout now. I mark my new channel. I find that low. I mark up that swing high. And again, you'll see a lot of examples of these, right? Inside that quick start class, we jump back above the moving average. That's a bull trap, right? That's a buyer failure. And that's a move back lower. Take the size of that range, right? The size of that breakout leg and pin it right there. Okay, that's going to give you now where that target is, right? Makes sense? Don't worry about this middle leg right there. Trends love the number 3. So we'll go 1, 2, 3, and usually that first and third leg are pretty darn symmetrical. Now, this thing could really move. There's a lot of space down here. I mean, 4,600. I mean, look at all this. Look at all the open space, right? We don't get a bottom until 45.25, right? So you definitely want to rely on those measured moves. 4,600 looks like it's probably going to be a little bit out of reach tomorrow, but who knows, right? Tomorrow is a non-farm Friday. So at this point, got a pretty good idea with how to buy it, how to sell it. I think probably the best possible scenario here for tomorrow for us right now would be either getting down and buying it back up, right? Or getting one of those breakouts going higher. Now, I've only talked about a couple of those breakouts. Let's cover more of them now, right, on the Nasdaq, shall we? Over on the Nasdaq is probably a little bit more obvious as far as the bullishness involved, right? There definitely was a range down here earlier on in the session, but as I always remind you, recency is very important, right? So even though we had a range at the beginning of the day today, right? Pendulum swings back and forth, buy low, sell high, right? Yada, yada, yada. Even though we had a range there earlier, this is the new trading range. There's obviously a bullish bias to this trading range. The one kind of big, let's keep it simple here for right now. The range acts like a magnet, right? So I want to find levels of support below the range. I want to buy off those levels of support. And again, right, I can buy off that level. I can buy off this level, right? I can buy the bull breakout. Got to be a little bit careful, right, to sell off that high because we do have a very strong move. And anytime we see a really strong move, you know that's going to give the bulls a lot of that momentum. The one thing I don't like about the Nasdaq is I really don't like the short. I mean, we'll take whatever it gets, right? We'll take whatever we get tomorrow. But unlike the S&P has all that wide open space. The Nasdaq doesn't, right? The Nasdaq is sitting at one hell of a big support area down here. It's a big, big bottom there. So you got to think anything that goes down right now may come right back up. And we'll talk about, right, of course, how to sell it as we go lower here in just a moment. So, really at this point, right, we're trying to buy it as it breaks higher, right? Trying to buy it as it goes lower. All right, how do we do that right now? How do we buy it going higher? Now, we talked about that 1, 2, 3 breakout pattern. Okay, now in this example, you really want to try to get that breakout to push right on through that 15,906. Okay, repeat after me. Broken pendulum, broken range. And I call these pendulum swings, right? Imagine there's a big pendulum, right? You know what a pendulum is, right? Swings back and forth like that, right? Pendulum swings back and forth, right? Swings back and forth like that. Same idea. Pendulum right there, right? We go down, we're going to swing back up, right? That's why I call it a pendulum swing, right? So we've got this we've got this pendulum swing up there. So you got to think these buyers want to retest this high right now. If we can push through that high, then we really have some great opportunity here for a nice big short squeeze, because you got 16,000 right above you, big round number, and then you got this wide open space up there. Now, obviously, again, I'm not in the business of predicting anything right now, but if the buyers can get this thing going, because tomorrow, again, we've got non-farm payrolls tomorrow, so who knows what the number is going to come out as. I have no idea what the number will be. I really don't care what the number is going to be tomorrow. Neither should you, right? The actual number itself tomorrow means nothing to us day traders. All that we need to worry about tomorrow is how the market reacts to that number. Okay, so don't get all obsessed with what the number is, if it's above or below. That's all noise. That's wasting your energy. You're wasting your brain cells on that. Focus your energy tomorrow on what does the market do directly after that news, or if you trade in the overnight right tonight, what is the market doing right in the overnight? And again, be aware, it may be pretty quiet in the overnight session here. So as we go higher, we talked about, right, that 1, 2, 3 breakout. We talked about the one strong move up, right? Gotta hold, gotta hold, gotta hold, gotta hold. The buyers have not been able to hold anything yet. So if they can hold it and they can jump, perfect. We'll find that new channel. We'll drill down to our faster time frame. You'll learn more about that stuff in the video course I mentioned earlier, right? And of course, we'll grab that first pullback. Again, the key is going to be to get to the pendulum swing. We get the 2-try breakout, right? Strong move up. Shallow pullback. Higher high in price. One of my favorite setups right now are these 2-try breakouts. Strong move, shallow pullback, higher high confirms the move. Trap setup, right? Right below that prior swing. And as I always remind you guys, even though it's not necessary, if you can combine the high of a channel, my goodness, I mean, that's almost a bulletproof trade. Just make it easy on it. Just give me the money, right? That's almost a guaranteed winning trade right there. Again, breaking through the pendulum swing off the low of that channel, that's a money trade right there. Now, how about another breakout? Here's one more breakout we may definitely see tomorrow, and that will be the spike in channel breakout, or a spike in grind, as I call it. Let's say, for example, now, right? Let's say, for example, here that we pop up, and instead of getting that, that pullback and that blast, right, or that 2-try trap we talked about, now the market kind of stubbornly starts to grind higher. Right? And this could easily happen because remember that big move down yesterday, right? What if the jobs number tomorrow comes out at like a gajillion, right? Let's say 105, or a million jobs get added, right? The market says, yippee, let's rip, right? Let's rip. Or who knows, right? Maybe the number tomorrow comes out really bad and the market says, oh, bad news is good news. Bad news for the jobs market means more stimulus, and that might make the market rip higher. Do you see how that works, right? A good high number tomorrow may not produce a rally. A lot of times, especially when the Fed is involved with interest rates like they are right now, a lot of times it's bad news is good news. So, they're anticipating, 800,000 new jobs tomorrow, right? What if we get 250? Maybe that is bad news is good news. Bad news for the markets means stimulus, right? Which runs higher. So if we do pop up, now the bears have walked away, right? The buyers are playing, they're running higher here. What do? Right? You mark up that high, you mark up that low. I'm not a big fan of chasing it. I'm just not a big fan of chasing it. I love traps, right? Like I mentioned earlier, I love that 2-try trap, but you might not get it. So what do? You mark up that high, you find that channel, and you wait for the first pullback. Right? As we saw a couple of examples of that today, right? You wait for that first pullback, get that trap, get that buyer failure, get that pullback combination, right? 3 different price action entries off the low of that. And again, you'll learn those more inside that free quick start class that I linked up before, right? So that is kind of that spike and grind, right? That spike and grind. These are very, very common whenever you have a big down day the day before, right? Where the sellers may get out of their positions and the market starts to kind of flutter higher. So keep an eye on that. And then I've got one more. We've covered 3 breakouts so far, right? The 1, 2, 3 breakout, the 2 try breakout, the spike and grind. I've got one more breakout, but I'm going to save it for oil because oil I think is the one that probably has the most likelihood for the 4th and final breakout as we go. Now, could I sell up here? Oh, yeah, you could definitely sell, right? You definitely want to make sure you take out that high, right? You definitely want to make sure you complete the pendulum swing. But now let's say, though, the buyers come in. They don't hold the pullback and go. No, now the buyers come in and they make a lower high, right? Then they come in to try again, right? They try again. Now we get the 1, the 2. What I can do is I can draw a trend line off of that low, a trend line off of that high. Another great entry is a trap above that high, right? Nice juicy signal, right? And we're selling it right back down off that high. That's an easy way to take a reversal, right? A reversal coming off of that high here. That's one of my favorite reversal trades. Again, we'll want to use the 2 try rule in this situation because it is so bullish overall, or bullish in the short term, right? That's when we want to trade it as it goes, right? As it goes higher here. Now, as we go lower, or I should say, remember, stay away from the middle, right? We don't want to mess around in the middle. If the market was to run lower, right? Market runs lower. We got this trend line coming down here, right? Got to keep an eye on that. If this market does start to run lower. If we run lower here, remember there's a lot of support down here. And really, for the most part, I didn't want to kind of clutter this chart up too much. But for the most part, though, I mean, you could easily say that support. I mean, you know, there's a whole peppering of levels down here, right? So just be aware. I'm trying to keep the chart relatively simple here for you. But, I mean, this whole area really could be seen as a support zone. I just thought it'd be a little ridiculous to make the whole chart green down there. But anyways, so there's a lot of support down there. So what we're going to do is we want to get down to that low, right? Ideally, take out that low, and then same thing, right? Same thing. Now, as we go lower here, this trend line is definitely not as scary as that S&P trend line, right? So as you can see, when we come back up here now, right, bears try once, bears try twice. You know, I'm not too worried about that entry right there at all, right? It doesn't scare me at all. I can easily get at least a 1-to-1 and then leave that runner back up, right, to that high. So just be aware of that situation, right? If the trend line is really steep like this, then yeah, you're going to want that trap entry, right? Or you're going to want to use it on as support on the side. Makes sense, right? That makes sense, right? You want to use a trap. Again, 2 try rule is in play because of all of that bearishness. Okay, I want to be a buyer because I'm at support with a range above me, right? That's why I want to buy in the first place. And then, of course, I can use that trend line overhead, which oftentimes will have a little trend line right there, and you can combine both trend lines for that run back up again, right? In this case, though, again, I don't think it's that bad, though, right? You get that trend line, that isn't scary at all, right? So we take out that low. Now, here's something you want to think about, right? Let's say the bears try once, right? They try twice. We get that trend line, right, for the long off that low. Maybe we get lucky, right? Maybe we get a trap anyways, right? Boy, would that be nice. You know, traps are always great because you're trapping in those bears. And once they get that big, juicy signal candle, right, and you'll learn all about the signal candles and the rules we use, all part of that quick start video that I mentioned before, right? But, you know, that's the idea behind that long here. Now, here's what I want you to think about. At this point now, that range is still a magnet, right? This is a whole big area of support down here. So the size this move lower is size that move higher, right? I mean, you can see, boy, that's pretty convenient right there. So would it make a lot of sense tomorrow? I'm just tossing some ideas out there. What if the news comes out really, really bad, right? The market shoots lower, right? Kind of head fakes, 1 try, 2 try, and then rips, right? Bad news, good news. Okay, that could easily happen tomorrow. So here's when to trade it. Okay, we know we'll look for that failure off that low. Now, if the market makes that rip going higher, okay, and keep in mind, this technique will apply to pretty much all the other markets here tonight. I just don't want to put everything on one chart, right? The video would be too long that way. So we let the 2 tries happen, right? We get the entry we want there, whatever we get. The market rips higher now. Now trade the turn, right? Trade the turn. So one of my favorite ways to do this is to grab a new channel, find that new channel, find that little prior swing, right? Grab that trap, grab that failure, grab that pullback combo, right? So we're buying a failure, right? We're trapping in those bears and buying the failure. And then once the trade turns, right? Once the momentum starts to turn now we go out, we find that new channel. And remember, first test is always the best test, right? Take some profit off at the high of that range and then leave a runner, right, for that big pendulum swing going higher here, right? That's a really, really nice setup for tomorrow as well. So I think we're pretty good on this one, right? The one kind of variable, the one thing we're going to worry, I would think probably the most difficult part tomorrow will be trying to sell down here, just because you've got all that area of support. So, don't be surprised if we see something like this where it runs lower, right? You get that, what looks to be like a 1, 2, 3 breakdown, right? And then all of a sudden, what happens, right? The bears come in, they try to get short, they try once, they try twice, and then whoops, right back up into that trading range. That's what you got to be careful with tomorrow. You don't want to get too aggressive on that. So, but if they can really punch, right? If they can really punch. And what'll probably have to happen in this situation is it'll probably end up being one of those situations where it'll be a 1, 2, 3, right? You'll actually get the 1, 2, 3 breakdown. But instead of trying to sell off the top of that channel, right into that area of support, usually what happens in these scenarios is it turns into one of those grinders, right? It'll start to grind down. Buyers will basically liquidate. They're going to give up on trying to defend this low here, and the price will liquidate and just simply grind down. Those can be difficult because you don't really get any shot to get in. So, like I mentioned last night quite a bit in the newsletter, stay patient, because if it starts to really grind down like that, that once it pops up, everybody's going to want to be, and I'm not doing a very good job at drawing this in the right location right now. It'll be a little bit lower than that probably, right? So 1, 2, 3. Again, right? You get that, right? You get that 1, 2, 3 breakout, but now it starts to grind down, right? That grind is usually a pretty good giveaway. This is not going to go back up here anytime soon. So we'll find that low. We'll mark up that high. Again, I always like to look for those traps above prior swings. Sometimes we don't get that trap. Sometimes it'll simply go above the moving average. We trap in those buyers, right? It'll look like this, right? Where it goes up above the moving average. The buyers try to get in. All that bear momentum and right selects back down there. That type of setup we'll look for over there as well. But again, you just want to make sure you don't chase it as it goes lower, and really make sure you see that really good proof that this market really wants to go lower here. Where would the next objective be? Where would that target be? Remember, it's the breakout leg, right? And this, I know it's kind of advanced, but I think you can handle it. The size of that leg, right? Remember, the middle leg is not the situation. It's not what we care about, right? It's that first leg, right? So you already know, once you get that pullback, you know where that next target is, or where the next objective is, right? Where the market wants to go. And then we've got, again, you can see a pretty wide open space down there. There's not a lot underneath there. So really lean on those measured move targets as we go lower here. All right, so we've got a pretty good plan of attack there on the Nasdaq. Hopefully this market will kind of hang tight here overnight and not disrupt things too much here ahead of that news here for tomorrow. Let's keep rolling. I think probably the most obvious, maybe the easiest of all of these for tomorrow, at least to put a game plan together, is probably going to be the crude oil here. Now, what do we have here on oil? Well, you can obviously see, right? The buyers ripped it higher and pretty much ran right into a trading range. You can see a really good example here of how the first leg and the final leg are usually pretty darn symmetrical, right? How we kind of ignore that middle leg, right? If you were trying to draw this as the measured move, that doesn't work that way, right? This isn't symmetrical. That's not big enough. You'll notice right away when you look at these, when you look at a trend as a three-legged move, 1, 2, 3. it's very, very common where that first leg and that final leg, first and third, are symmetrical. Every once in a while, when the trend is really ripping, it'll be that second leg. But honestly, I mean, that's like maybe once or twice a month, so it's not really worth using it very much just because it's not very common. We go where the consistency is. And anyways, that's where that measured move comes from. I want to make sure I point that out to you. You kind of see what I'm talking about right there in play. One very, very big important clue here is look at the strength of that move going higher. Anytime we see a strong kind of breakaway move that separates off the moving average, we know what I call an open loop. An open loop is a metaphor, right? It's kind of a play on words for unfinished business is basically what it is, right? So we run up, we know there's a big magnet right now, right back to that high, and so we really want to focus on the buy side here right now. And I'll tell you, there's a lot of different ways that you can buy this. I really like this area right here, 78.52, 78.5 area. The reason for that is because it's a prior swing high, right? We get that prior swing high right there. I think the gift right now would be even a deeper pullback here and buy off of that, right? And buy off that low. I would imagine that's where buyers would really love to get in. You want to talk about 5x, 10x your money. That's where those trades are, because you got the big open loop up there, right? Small risk, big reward up there. Now, if the bears can hold this and run it back down, well, yeah, now we've got that range down there. So if the bears, right, if the bears do wrestle control away from it, we know exactly where they want to go, right? Remember, ranges act like magnets. Don't be surprised on a Friday afternoon if we finish right around the previous Friday's close, especially in today's kind of range-bound scenario, right, into the new year. So we know where the bears would love to get to tomorrow if they get their hooks in this thing. The bulls have maybe not easy, but if the bulls can get this party going here, 82.35 is a big range top head of that 84 level, right? So we got some. This right here is probably the most exciting part for the buyers tomorrow, because this is basically a big range. I'm not sure if I have it all the way back here or not on that. It's basically, yeah, it's too far back, but it's basically a big range up there, right? So if we can crack above the 80.5 area, oftentimes it'll just vacuum right up to the 82.35. So there's a lot of really great setups here, a lot of potential here on this oil for tomorrow. So a lot of this is going to be similar. We talk about on the S&P and the Nasdaq. Let's kind of break it down here one more time. Now, we've been talking about breakouts today, right? Some breakout patterns that you want to look for, right? So I'm not gonna bore you with all the repeat, right? We got the 1, 2, 3 breakout. We talked about that already. You got the 2 try breakout. Again, you want to think about, we're going to want to see this thing really push through that pendulum swing, right? So it's going to have to be a 1, 2, 3, right? It'll want to be a 1, 2 try trap, right? We're going to want to see them really poke through that high here, right? The spike and grind, right? The spike and grind, that'll be obvious. It'll be obvious that they break out of that trading range, right? Get that trap, get that failure, get that pullback combination. What's one more? The breakout pullback. Absolutely, the breakout pullback. Now, we talked about a breakout pullback on oil. What was it, Tuesday night? I think it was this first week of the new year, right? It's like it's what a blur. Isn't it always like that? You come back after some break, right? You're trying to get back in the rhythm. It's like, what day is it again? What day is it again right now? Is it January already? All kidding aside, though, this high right there, that's your magic number. Now, there's a lot of different opinions on how to trade breakout pullbacks. What you want to remember is you've got to see proof. And what I always tell my students is you want to see some daylight, right? So imagine that area right there. I'm not looking for a breakout pullback like this, right? This is not the breakout pullback I want. That is not enough space. It's not enough momentum. It's not enough open space there. What you really want for a good breakout pullback, keeping your eyes on that area right here, is you want to see it really go higher, You want to see it now really pull back underneath the moving average. That level of support will likely hold now. Let the sellers come in and try to short it. Once you see that nice juicy red candle coming off the moving average and the bears commit, you know exactly where their pain points are, right? You know exactly where they start to wave the white flag. If you're short off that high and you see that nice strong signal coming right in your face, you're not going to stick around much longer. You might even flip your position and reverse it into a long trade, right? So that's the way I like to trade a breakout pullback. I'm not a big fan again, of the small breakout pullbacks, and I'm really not a big fan of actually buying that pullback there. What I like to do is I like to wait for those sellers to commit, because a lot of times they will take it right back down again. It's a range after all, right? So once we get that breakout, that pullback, rope in those bears, run those stops, grab that first pullback, right? Grab that first pullback. Again, failure setup, pullback setup. And then what again was the target again? It was that measured move, right? The size of that leg, right? Measured move. And again, I think it's pretty obvious that 82.35 would be a big objective there, right, for those buyers. So now we've got a couple ideas there for how the market may go higher here. And again, all four of those breakout patterns can absolutely be used across all of these markets, right? Even the breakout pullback can be used on the S&P and the Nasdaq. I don't want to repeat everything over and over again here for you. So can I sell off the high here right now? We definitely can, but we got to use what? The 2 try rule, right? We want the 1. We want the 2. Now remember, a bunch of different ways you can take this trade, right? You can find that hidden channel and take it like that. You can grab your trap and hit it like that. Don't forget, oftentimes when this thing collapses off the high, you can now mark up that low. You can mark up that high, right? New channel, and you can sell that first test. Right? So again, it's a 2-try failure. We harness the 2-try rule because we're going against momentum. And then remember, guys, the first test is always the best test, right? Mark up the amount above, mark up the amount below. That creates your objective on the other side. That's how you want to sell it as we come off of that high. Now, as we go lower, what's the problem? The problem is not location. It's a great location with a range above us. Nice big risk-reward ratio. Nice easy spot going higher. The problem is going to be momentum. So as we go lower here now, as you can imagine, we're probably going to get some trend lines coming down. So this is where you're going to have to kind of we'll have to wait and see what this thing looks like, right? Because you can obviously see this could, if it drops back down, we got that trend line coming down. You could easily make an argument to really tighten that trend line down. Why does that matter? Because again, it all depends on, where does the signal happen? Does the signal happen right there? If that's the case, I don't want to buy into it. I want to buy up and over and use it, right? Ideally, what you want is you want to get down to this area, get those bears to come in, right? Try a couple times here, lock up those stops, right? Get those bears to commit. Again, I'm not a big fan of picking bottoms. Not a big fan of trying to predict or try to get that low tick. People love to brag about I got the low tick or only a couple ticks off the low. Those people don't make money. They don't. It's very difficult it's difficult to get lucky every single day in the markets. Go to Vegas. Right? You can't sit in the casino all day long. Your odds are against you, right? So I don't like to pick the bottoms like that. It's just easier to wait for the 1, 2, wait for those stops to get hit, right? And buy right into it off that, right? And then again, if the trend line is coming down like that, okay, again, we'll have to kind of wait and see what it looks like at the time. We may have to go in for a trap, right? Or we may get lucky. We may get enough space up there. We may get that stop run to try, and we may get that, right? Something like that. Think about that setup, right? Trend line comes down overhead, right? We use the trend line as an area of support on the opposite side. At the same time, we're drawing a new channel, right? That's a money trade right there. So definitely excited for the pullback. Like I said, I think this is where the buyers would really like to get to tomorrow. Now, obviously, if the sellers can get it down lower, if the bears can hold that pullback and go, right, that is a breakout. And so we've talked about 4 different breakout patterns. The ones that I would most likely look for tomorrow going lower would be a 1, 2, 3 breakout. Again, really got to see a lot of strength off that low. 1, 2, 3 breakout, right? And we're selling the first test off that high. I think a 2-try breakout, let's say, for example, news comes out, right? The market takes off to the downside, really strong move down, right? Shallow pullback, lower low in price. That trap setup will be a nice trade short there as we go back to that range we talked about earlier. Or, right, a kind of a spike and grind, right? That spike and grind. Mark up that low, mark up that, right? Mark up that high, get that trap, get above the moving average, trap, failure, and pullback combination. All right, guys. And again, I apologize. I'm simply kind of scribbling in the chart here tonight, right? But I have hundreds of examples of how I like to take these trades and how we qualify the setups, right, in our quick start class. So definitely grab that, and you'll learn a whole lot more about that. And that way you'll be ready to go for tomorrow. Now, don't forget, we'll be in the trade room, right, 8 o'clock Eastern time. Would love to see you there trading right along with us. I've covered a lot in this video here tonight, but don't forget, I go into a lot more detail as part of our membership classes here at School of Trade. I'll put all of the membership links you guys need right in the description of this YouTube video. If you're on the website right now, I'll put a big button for you below the video tonight to get registered and come out and join us. As always, don't be a stranger. If you have any questions about charts or computers or brokers or data or membership specials we have going on right now for the new year, don't be afraid to call the office. I'd be happy to answer all your questions and help you get registered, or at least to help you point you in the right direction. All right, guys, thank you so much for sticking around tonight. It's been a great first week back. We've had a very good week in the trade room. Looking forward to seeing you in our trade room very soon as a new member. Enjoy the rest of your evening. Good luck tomorrow if we don't see you guys there, and we'll see you guys next week, right? We'll do it all again next week on Monday evening. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.